Market Day Report. So glad you're with us this morning. Let's jump into the markets, and we'll start with the row crops. And the corn market still in the red. March contract at $4.90 3/4. It's off 6 cents, and new crop $4.63 3/4, off 3 pennies. Soybean trade has been lower as well, with double-digit losses across the board. March off 16 at 10.44 1/2. Soy meal has been lower throughout the morning, despite some positive export news, and soy oil continues its fall as well, as it's lower across the board. What about the wheat market? Wheat kind of shaking everything else off and moving higher, with the front month for Chicago at 5.65 1/2. That's just a tick off the day's high and up 3 cents on the session. Hard red, we're sticking with the old crop here, 5.85 at the top of the, what is that, an 8, 7, 9 cent trading range, and it's up now at 5.85 1/4, new high for the day, and it's up a nickel. Spring wheat, old crop March contract 6.16 3/4, it's up 3, and the cotton market has been lower all morning, but December now ticking up 3 points, 68.95. All right, Ted Seifried's with Zaner Ag Hedge, and Ted kind of laid it out there, but really, is there big news to talk about right now in the row crops?
Well, Tony, I mean, look, we've got a massive tug of war happening here with the row crops. Corn seems like it wants to go higher, while soybeans, they have their moments, right? They have their moments where it wants to follow corn, but then other moments where it really wants to lead the way lower. And what it's doing is it's really highlighting the tug of war that we have going on between, policy and potential tariffs, and just geopolitical stuff versus South American weather, which is, we're still concerned. We will continue to be concerned about Argentina. We will continue to be concerned about how late that second season safrinha corn crop is going to get planted and how that's going to get pushed back into their hot and dry season as it's going to go into grain fill. So, I mean, there is a lot of concern and reason for weather premium for corn. And you can even say for soybeans, there's a short-term bullish idea of, hey, the longer that Brazil takes to get harvested and the longer it takes them to get their product to port and start fulfilling their new crop export sales agenda, it could leave a bit of a window open for us for more exports. However, and this is, I think, where the pressure is coming from today, you look at export sales, and wow, we really fell flat on our face there for soybeans at 438,000 metric tons. That was below the low end of trade guesses, but it was an extremely wide range of guesses between 450,000 and 1.7 million. It's almost impossible to not fall in that range, but we found a way to do it on the low end, and that is disappointing. So if the global end users are not concerned or don't feel a sense of urgency, I should say, about Argentina dryness, about Brazilian harvest delays, if China and company aren't concerned about that and buying U.S. beans, well, is that really a positive factor on price action? And I think the answer to that, at least for the moment, is not. So we'll have to continue to watch to see if those export sales come in. What I would call bullish factors in weather in South America have to be expressed in the form of extra sales from the U.S. to other countries, and specifically China. And if that doesn't happen, then it really, I don't know, it's kind of a non-event thing, especially if bigger tariffs do come into play. And we're wondering what's going to happen over the weekend. There's not been a whole lot of mention of China lately, but we know that's still on the table. So there's a lot going on, and we've been very volatile in these markets right now. And the last thing I'll say about the row crops, Tony, is that when you have volatility like this, it generally means one of two things. It could be an extreme of the market, meaning a high or a low, in this case, probably a high, or it can be an area consolidation before taking another leg higher. I'd say it's about 70-30% topping versus coiling for another extension. But all that remains to be seen, and a lot of that depends on what happens weather-wise and news-wise and policy-wise. And again, there's a lot at play right now.
All right, Ted, hang on. We're going to come back and talk about volatility. We've seen some in the livestock markets. We'll come back and talk about that. Market Day Report continues after this. All right, so we'll continue to watch the cattle market today. CME feeder index at 279.45 and the national steer price at 284.03, both of those moving higher. What about the market? Let's hit quickly the live cattle market in February at 205.95. That's a $1.05 lower. Feeder cattle here in the morning session higher on January, March, down 110, 274.17. And the hogs, are they moving higher? They are. February up 55 at 84.45. Ted Seifried's with Zaner Ag Hedge. All right, Ted, what are you watching here?
You know, Eric, a 2-day pullback here in the live cattle, right? I mean, we posted a new recent high, or a new really all-time high yesterday, but then backed off of it, and now we're extending a little bit lower. The thing about that is, we got to 82% on a relative strength index. 82% is anything over 80 is considered an extreme overbought case or scenario. So from a technical standpoint, it's very logical that we're seeing a little bit of a pullback to correct that relative strength index. We're back down to 71% on the RSI, which is still overbought, but a much less extreme case. But I got to say, Tony, with the way that we've moved higher, both on the board and also in cash prices, just in the last month, it's been sort of parabolic. To me, it feels a lot like a mature bull market that is potentially getting to the end of its term. Not saying that we can't go higher, not saying that we're not just collecting ourselves and fixing the relative strength index before we do take another leg higher. But to me, this feels like the tertiary or the final sort of wave in a bull market. And this has been a very long-term bull market in the cattle. So I think from a producer standpoint, you have to be looking at ways of protecting the downside. As you know, and as I've expressed both with you on radio and during the show program during the day, I'm a little concerned about the economy here for the next few months. So I think there's a lot of reasons and rationale to go in there and take a look at protecting downside in the cattle complex. Hogs, glad to see that we're a little bit higher. I mean, just kind of par for the course, I think, for the moment.
Yeah.